All right, let's jump into things. Where we at? 24th of August. So coming into finally last week of of summer. Well, European summer, US summer, these kind of periods and that sort of when it's obviously sort of been a bit of sort of up and down with the sort of flows and that, but yeah, hopefully, sort of once we sort of get back into, well, get over the sort of summer period and that, back into, I guess, what would be their sort of autumn, fall, I think they call it. I don't know if they call that over in Europe as well, but it's certainly over in America. But hopefully, we can start to see a little bit of stability sort of coming through the markets because, of course, everybody's seen what's happened now, but this was the big one to sort of talk about coming into the end of Friday session there. And look, you can never tell what everybody else is thinking, but I would say the mark was caught off guard. I was definitely sort of caught off guard. I actually I did fairly well, just on a personal note, in the sense that I planned to sort of lighten up moving into it, which was correct because I thought we were actually going to sort of get a little bit, not so much of a hawkish, but sort of more leaning towards the hawkish side than the dovish side than um, how Powell may have sort of sounded, but obviously that was completely wrong, and things exploded the other side. And this is where I sort of think that, like, a lot of people sort of come out sort of think, oh, yeah, 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 that's how we sort of saw it happening. But, the fact that the market moved so drastically and so hard makes me kind of think that it was a shock, because that's the shock kind of reaction. Like, and we're not talking sort of like, sort of, oh, let's listen to what he's got to say. We're talking like on the hour, like the first line, the first words that he was saying, 12 o'clock, bang, like the market's just absolutely exploded. So I think with some of these things as well, I'm sure that there's people get sort of a little bit of an inside look at what he's going to be saying. Because, if he's talking for whatever it was, 30 minutes, 45 minutes or so, you're not like, why would you react so drastically off just one line? I mean, look, it was obviously a fairly big, significant flip for his sort of approach. But, of course, that's the rest of the half hour to unpack how they got to that point. But the market just moved and it did not sort of look back with it all. So that was the big one, really sort of power talking right smack bang on 12 o'clock. And then, of course, it carried over for the next day. But from what I've seen, the weekend market's been fairly flat, so it hasn't really been anything sort of super significant that sort of added onto that. I thought we might be sort of getting, obviously, as I said, a little bit more of a sort of dovish, hawkish tone to things. Obviously, that was wrong. And I thought that maybe we would have had a bit of a lag, a delay effect, and have a bit more of a gap on the Monday, sort of once the whole sort of symposium had sort of finished. Also not not correct. So yeah, those things sort of flew up there. So it'll be fun to unpack the sort of charts. But look, day three in that. So again, not really much else has sort of come out from these things. We've got a couple of sort of other sort of people speaking there as well. Obviously, sort of during that sort of time there. So nothing that seems to be sort of, oh my God, wow, we've got great insight to it all. Powell sort of kicked it all off, and from what I'm seeing, that was the only sort of major headline that we've seen across the board with it. So yeah, weekend wrap, weekend review. Obviously there's a bit of a last minute turn to the week as a review, but obviously give us a chance to have a look at sort of what's happening and what's sort of coming up through the week if we've got a bit of data, because we've got a couple of bigger bits of data sort of coming out here. One just straight off the bat here, Aussie CPI expected to tick up there, so it's a bit interesting, but we'll get to that. So come Monday, we've got retail sales over in New Zealand. Again, not really sort of super excited. I'm not really something that I'd be paying close attention to. Got a bank holiday over in the UK. What do they got? Just a summer bank holiday. Observance of the summer bank holiday. Okay, so the banks will be closed. Fair enough. Anyway, as typically usual, Mondays just seem to be quite flat for sort of any sort of market moving data. New home sales coming out from the US across there. Actually, just on that note, was just sort of thinking actually, because we did have a little bit of data into the end of the week with their PMIs, but that we would have sort of covered on the Friday. It was on the Thursday night. So moving along, we've got not really anything great. I mean, look, monetary policy minutes and that. Again, you've got the sort of the press conference after the rate decisions. So you got a pretty good insight as to sort of how they were sort of viewing these things. They are sort of saying, hey, look, cutting is the direction they want to sort of keep going. One cut's definitely not the sort of the base case for it all. So I think they are sort of at least pricing another one, but possibly two cuts through to the end of the year as well. So again, these kind of things. can keep a lid on the Aussie, but given sort of what we've just seen from Powell, and I guess I should actually sort of unpack a little bit of what he actually sort of said, and with the Fed, same with the RBA, or the RBA, same as the Fed, I should say, probably, because we're sort of the tail with this one. They've got the dual mandate, so they've got the two things that they're using to sort of gauge what they should be doing with their rates, mainly sort of the inflation aspect of things, which is obviously what's been at the forefront for a long time. And I covered this idea last week. The other side of it, of course, is the jobs. And really, you got to sort of just be able to pick and sort of as to sort of what is their driving kind of sort of force. And this is the reason that sort of, at least myself, I got caught a little bit off guard because the inflation has been the sort of big sort of main sort of driver of Powell's sort of reasoning to sort of hold a little bit longer. He was saying, look, inflation could still pop up in that from tariffs. And because of that, sort of like, that's the main thing that we're looking for. If the jobs get very bad, I could be swayed. And so since that data, we had PPI, so CPI, which is kind of flat, but at least it wasn't coming down. So it doesn't sort of kind of hits in the middle there. It's not sort of like, okay, well, it's if anything, I would sort of probably say it leans a little bit more on the hawkish side because it's not coming down. So, you know what I mean? It's not like, okay, well, it's been coming down. If we sort of drop the rates and we see it start to move up, we've got that little breathing room. If it's holding flat and you drop the rates, most likely you're going to see CPI cruise up anyway. So that was a bit in the middle, but slightly more over to the hawkish side. You've got PPI, which beat quite drastically to the top side. So that's obviously the producer price index. So that's more in the idea that you should be holding. And then you had the job numbers. And of course, we had the job numbers that were, I think it came 73,000 for the last print. But the big headline with that was obviously the revision down of 120, 130,000 or something just from the month before. That's 130,000 they overstated in 1 month, which is just insane. Anyway, the person that is in charge of those statistics got the can off the back of that as well, which rightly so. I mean, that's a drastic sort of change. But so the idea was that sort of Powell was like, look, I'm going to hold strong, hold strong, hold strong. But with his speech now, he came out sort of saying that, look, the jobs is probably starting to take the forefront of what he's going to be looking at, or they, him, whatever, to be looking at as the sort of driving decider as to whether they're going to cut. And so, the big sort of call is, are the Fed going to cut in September? And this has been flying up and down and up and down. And that's the thing, as I said, like we had PPI data went one way, we had this sort of obviously sort of speech and sort of US dollar got smashed down there. And so the percentage rates of the market sort of technically kind of sort of supposedly pricing the idea that they're going to cut, fluctuating up and down and up and down, up and down. So I think it was up around in the 90s, dropped down to about 80. I don't know where it's at the moment, maybe low 90s or so. But obviously, sort of like the idea that they're going to cut in September, well, that freaks the market for US dollar. But then you see these other assets, like the risk-on assets, like the equity markets, they all sort of rocket to the top side. So these things sort of moving sort of back and forth with it all, and he's kind of sort of saying now that in terms of inflation, it still probably could be an issue, probably is still going to pop up, but he doesn't. The wording was more about the idea that it's not going to come all. So it is going to happen, but it's not going to happen all at once, which I probably have to unpack and sort of watch again to sort of really cover it. But basically what he was sort of saying is that, look, it is going to sort of come, but it's not going to be as bad as we thought it was going to be. And because inflation has now sort of lost its prevalence as sort of being the number one, sort of the front leader of their decision making towards the policy, well, now that leaves the jobs, obviously, by default, the number one thing that they're looking at. And jobs obviously took a bit of a hit that we saw with last sort of NFP. So next NFP is up in 2 weeks on Friday, on the 5th of September. That's going to be the big one. And, you hear people talking, they're saying, hey, look, if we can continue that trajectory down, and you say, maybe even if you got a negative print, because we've got negative ADP, I think either last time or the time before. But if they get a negative print there, then, I mean, it's all talk, you know what I mean? But there's talk of 50 base point cuts. And, that's even worse. And obviously, it sort of hammers DXY down, which I'll explain this a bit more with the chart in a moment, because that's obviously sort of what we're kind of going to be sort of working around for sort of how we're going to see these things sort of move over the next sort of coming months, well, coming weeks at least, but month and could actually sort of be sort of month trend setting stuff. Yeah, so that's obviously going to be the sort of main thing looking forward. So basically, I guess summarize with it is that sort of inflation isn't as big a driver as he had been sort of planning, and that's why sort of like when PPI was coming in hot and hotter, the market was like, oh, geez, you know what I mean? He's talking about inflation being the number one thing. Inflation's up here. Let's sort of freak out a little bit, and you saw US dollar get bid up. Inflation's still potential to be an issue, but it's not their number one driving issue. He's now shifted his focus to the jobs, and the jobs are obviously looking pretty weak. And that's why we saw US dollar sort of sell off there because it promotes the idea that they're probably looking more so to cut in September. Hence, the sort of like market pricing these things percentage moved up a little bit higher. Anyway, so that was Powell sort of over the Friday night. So back to the data here. So moving through, have we got anything through Tuesday on in Asia? Not really much through Europe as well. So we've got the monetary policy minutes for RBA and that Tuesday. Durable goods coming through. That's probably the first sort of bit of data that you might see a little bit of reaction on, and that's still in a negative kind of territory here, as you can see. But again, it's one of those sort of great things, like getting better, but not still great. And US dollar DXY, it needs to have something positive to hold it together because the actual economic data at the moment, it's not superstar, but it's not that bad. And, you know, as long as they can sort of like not have that sort of like, okay, the other factor of sort of like economic slowdown, low job numbers, inflation's not the worry. That's the secret sauce for US dollar to get absolutely hammered. But if you can throw a couple little spanners in the work, like as in sort of actual stronger economic data, so the economy actually doesn't look too bad, it opens the idea that maybe, you know, the job numbers could sort of hold steady at least. But, you know, we'll see how we go with this because, of course, you know, we had the unemployment claims kick up last week as well. So, again, not a great thing for the job side of stuff. So, really, what I'm getting at is the focus has shifted more to jobs and job numbers and that, opposed to, and also you know, economic numbers, these kind of things, which are looking very weak over here, actually, as we get to the manufacturing numbers, but more so than the inflation. So obviously it needs to try and keep at least this side of stuff going. If this is another pillar falling, as in like, you know, we get sort of weak numbers over here as well, it's just going to sort of add to the downward pressure on US dollar. We've got Barkin thing. I don't know this guy as to so much, but I think pretty much that what's it, Bowman and Waller are kind of the sort of dissenters, and it seems that they've got Powell on side now. So it'd be interesting to see if any of these other speakers start to change their tone because the kind of top dog is sort of spinning a little bit or flipping a little bit as well. Move forward, not really much else through there. We got, as I said, manufacturing number. We got sort of consumer confidence. Consumer confidence still has been going previously, sort of up and down and that, but it's not holding okay for the time being. 3,000 households. Yeah, okay, interesting. Rigid manufacturing, again, not great numbers, but you know, moving in the right direction, I suppose. Well, supposedly. So yeah, we go. Still pretty shoddy looking numbers are quite weak compared to what we've seen for quite a while. Yeah, actually going back to kind of September. So again, maybe this could be more of a seasonal thing because you look at August and September last year, July, August, September, which is obviously those summer months, and you know, quite sort of low on the numbers there. So we'll see how we go with this one here. But again, I wouldn't be expecting a great deal off that. Move forward, haven't got much else here. We got, as I said, CPI for Aussie on Wednesday. Now, this is an interesting one because obviously, you know, they're pricing cuts and all this kind of stuff as well, and inflation very, very much down into their band. It's an interesting thing to sort of see how much tolerance they have. That's a fairly big sort of jump up. You know what I mean? These things don't tend to move. If you look at these, 2.5 down to 2.4, 2.4 to 2.3, you know, 2.3, 2.1, like one or two things. To jump that much in one print is quite big. And I think sort of any sort of positive number here, like as in higher, hotter sort of print on the CPI, will probably actually bolster to Aussie holding a little bit because obviously Aussie smackdown 420 or 64.20 were very strong supports, held very strongly, and it jumped up back up. I think it got above 65. I think it may have closed just underneath it. But of course, we'll go unpack the stuff with the charts. Moving forward, not really a great deal here. The sparking guys speaking again. Um, Thursday, not a great deal, not a great deal. So GDP numbers out on Thursday evening, 10:30 there. Slight tick up as it's going compared to recently. Still moving in that upward sort of trajectory. I think this is obviously a little bit of a outlier here. This is probably obviously because this is quarter on quarter, possibly in fact impacted from around the. There's got to be some sort of reason for around that sort of tariff kind of period, but obviously a little bit of an outlier there. But compared to the rest of them, it's not too bad a little print. Again, another one. They just need to keep linking together some positive data. Like the sentiment with the US dollar is so sour at the moment. Any sort of weak number, the market's just going to go, yep, there's just another reason, bang, to sort of sell it down. Same thing with the unemployment claims here. Again, this one's out weekly. This one's sort of been creepy, came down, creeped back up. So it has sort of started to just sort of creep up a little bit last week. So it'd be interesting to sort of see if they put another print in the 230s. Or if they're going to sort of cool it back down into these sort of 20s kind of zone. But I think sort of certainly anything, if it keeps moving in that trajectory, again, jobs I think is going to be the number one thing that's going to be driving US dollar a little bit, sort of moving forward in the sort of short term future. We've got CPI coming down in Tokyo, so yeah, moving down there. Unemployment rate 2.5%. That's pretty good for an unemployment rate. Certainly compared to a lot of these other guys. Moving forward, okay, nothing's really impacting us here. And then to finish off there, PCA, okay, another one to sort of finish the week off here. So PCA, is like it's as far as I can really sort of deduce. I'm sure obviously there is some sort of differences to CPI with it all, but this is supposedly quoted what is the Fed's more preferred sort of bit of data in regards to inflation. So it'd be interesting to sort of see how this one sort of plays out. It's obviously finishing the week off there. A couple of other bits of sort of data coming out at the same time. We've got some sort of Chicago PMIs as well. And then obviously sort of consumer sentiment. So consumer sentiment's not too bad over there. And this is the thing, it's sort of like, again, they just need to have that stronger bit of sort of the succession of stronger bits of data without just throwing a continual sort of spanner in the works. So we'll see how that one sort of finish off for the week, but nothing really sort of major surprise at this stage. 0.3%, expected 0.3%. But again, any higher print here is going to sort of make that sort of argument for, hold on, wait, maybe they might hold a little bit stronger. But I think the risk with this is more if that's the downside. It just confirms the idea that, look, we don't really need to worry about the sort of inflation side of stuff so much. So, of course, across to the all important sort of charts with it all. So, DXY just can't really seem to sort of do anything. Yeah, it goes forward, and bang, bang. Absolutely clobbered. Let's jump onto this one. So this is what we were kind of looking at. So we were bouncing back up into, so where was Friday? Friday was obviously coming into this point over here, coming back up into what I sort of dubbed the sort of ISM sort of area, because this is where we sort of came down. After that big NFP sell down, we chopped a bit, ISM came out, bang, we're back down. Really wanted to sort of see it hold this 98.50 level. I said, so look, basically we had a little shorter term rising support through here. And I said, look, if it takes out those lows, well, it's back into its box. And, that's pretty much, look, I'll leave that there for now. Pretty much what we sort of saw. Like, this thing was just, okay, it's moving okay, and then bang. And if you get onto the lower time frame, this is what I'm saying, like, if you can think how much money this represents, and this is happening in 1 minute, you know what I mean? Like right on the turn of the hour. I mean, he didn't come out. It wasn't sort of like he came out and he sort of said, hey, look, you know what? Bang, we're doing an emergency cut. Like there was nothing that actually, again, it was just talk, and it's just the market sort of speculating and sort of shifting these things. The fact that it moves right on the hour, look, I know it may be a little bit tinfoil hat, but tell me people aren't already sort of in the know, knowing what he's going to say, but you can't act till he opens his mouth. Well, kind of sort of opens his mouth, and then bang, they absolutely dumped it down. And we saw everything react. We saw gold, Aussie, these things flew off the bat as well. I got fills in Aussie, which I didn't think I was going to get a fill on, and then it kept chopping through it. I was like, this is crazy. Let's get back onto a higher time frame. So where to from here? Obviously, look, it's sort of come back into previous area support. So we know that sort of even sort of coming back down here, because this is the big pullback after. So we got a couple of conflicting sort of bits of movement here. So this was obviously the move sort of prior to NFP, which actually I've got already marked out here. What am I talking about? So this green one just through here, drag this across, taking that last drive that we saw moving into NFP. NFP, obviously, as I just said a few moments ago, shocker number. Came down here, got slammed, ISM, blah, 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 all this kind of stuff. Trying to recover, undid it all. So, like, where were we? We're back down here, 13th of August, so 10 days or so. Move up here, undone in like, 4 hours or 3 hours, 2 hours, whatever. But it did come down, it held support. So I think this is going to be crucial for this area here. One thing that I do think is a little bit interesting with this is that there was no like no sort of give or take with the thing. Like normally if you see these large bits of movement and that, yes, when you look at the candle afterwards, say this NFP here, it's a completed candle. Bang, it's solid, dribble, 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 fell down. We could see very much a similar of this big massive sell down, dribble, 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 sell down, breakthrough here. So it means that these lows that we put in, they're going to be very, very crucial. So this is going to be a continuation break to the downside. Major supports there. So that's going to be very crucial should we break underneath that. So we got the alert set for that there. But the point is, it's like, as I said, it's sold down. It wasn't like a sort of, oh, bang, we had this fast move, bounce up, come down, bounce up, come down. It just kind of went down and just stayed down and just didn't do anything. Yes, it's coming into the end of the week. But as you can see, like it did another little dip down and sort of found support, yada, yada. But this is just a straight sort of candle right down and you might expect okay, profit taking second run, but this thing just came down and just consolidated at the lows. So you got to sort of think with these things, if you sort of like flip it around and you talk about gold or you talk about euro, you talk about Aussie, whatever, there was very little profit taking from this very fast move. And you got to think if you see this fast move and you don't lock in some profit, possibly why would you be doing it? Probably because you think there's another leg to go lower. You're like, I'm not going to take my profit after 2 minutes, which you very much could have and could have done very well. I'm going to wait because this thing's going to it's going to sit down here, and then bang, fall down here. So very much the fact that it's sort of consolidated at the bottom very much gives the idea that this could very well come down the bottom over the side over here. Now, that being the case in that, it doesn't mean that it's necessarily going to do it Monday morning. I mean, look, we could, but as I said, if you look at the weekend markets, there's no real drastic sort of moves, not at this point anyway. Let me just check again. Yeah, so I mean, this is what we're kind of looking at in terms of sort of weekend markets. And look, these things can always change a little bit, but this is the kind of stuff that you normally see through just a normal kind of weekend. So how it's vaguely kind of applicable is if things maintain like this, doesn't mean we're automatically going to be seeing some big massive gap down. Obviously, because there's very little change in the two prices there. We still got, what, 8 hours or so till market open, so things could change a little bit. But I think the bulk of the move was then off there. So in saying that, it's obviously sort of had a dip down. I would say maybe a little bit of move down early, but I could see this thing attempting to kind of rally up a little bit high. And then we can sort of look at, okay, where could people have been trying to buy the dip on this thing? And by, say, buying the dip, I say have orders just sitting there, which just got automatically chopped through, filled. Where could they sort of be selling? And are they just going to go, hey, look, you know what? That's a lot worse than I thought it was going to be. I'm just out. If I can get out for even. Like, as I said, I had some orders filled on Aussie, which I didn't think were going to fill. They just chopped straight through. If I get back to even with those, I wouldn't, at the very least, I'm going to lighten the position. because this has changed the outlook a little bit. It's changed the landscape, not fully changed the landscape, but it's certainly changed the look a little bit more than sort of what we could potentially have been seeing prior. And so with that, I would personally, well, I am going to personally sort of lighten some positions if I get to even on them, or if I get to sort of like small profit if it can. Like it wasn't too bad. It was, as I say, I didn't think I didn't think these things were going to fill. But the point is, instead of like if I'm sort of thinking like that, there's a likelihood that you're going to see other market sort of participants feeling like this as well. So these kind of areas where people are going, hey, look, if it dips, I'm going to buy the dip. Bang, it fills it, and then just chops through. Fills it, just chops through. Hits a higher time frame support. These are just small little supports through here. Should the price sort of get up to these levels, there's a chance that we kind of just sort of like go up and then people, it's working or not? There we go. They just go, yeah, that's it for me. And bang, they start to sort of sell those things down. And you may see a continued sort of move back down towards the lows. Because, you know, again, with the sort of structure of these things, we've found support, we move up, we find resistance, then we drive down. And this is most likely going to be the time that we're going to get either high, well, it's going to be high, low, double bottom, or lower low. I mean, they're the three outcomes you get. But the point is, we're kind of still in this point here. We've started to find some support. So it's only sort of structurally sound that we sort of move up at some point. And look, it may not come here. It may come up like here. Who knows? But the fact that we're not automatically just gapping down at this stage anyway, I should keep saying, there's a chance that we do see a little bit of a rally before we start to see that next leg to sort of come back down here to sort of see, check the resolve. Is this really the area? I mean, as I said, we've got it marked out. This was the low. I mean, we had this marked out from way back over here. So the market's not just once respected this level. They've respected it time and time and time and time and time again, even to the point of the most recent sort of attempt to rally up. Yes, it's completely wiped it out in 4 hours or 1 hour or whatever the hell it did. But you do know that the market, for whatever reason, all through all these periods here, they were also still valuing it. Now, the question is, do they still value it there? We saw that obviously it sort of halted a little bit here coming into the last hours of the week. But the second effort is what's going to be able to tell us at a quicker second effort. So as in like rally up and does it come straight back down? If it comes back down like here, most likely you're going to be seeing this thing move down and take out those lows. And then once we're down there, then we're looking back down to, you know, these sort of moves down over here. So this will be the next kind of support level around that sort of 97.12. That would be most likely the area. The fact that they didn't take any profit coming into the end of this kind of really does lead me to the idea that we could have some more pressure coming down here. Because, you know, you don't consolidate at the highs, nobody taking profit when you sort of think, hey, look, that's enough. But should we get the situation where it rallies up, comes down here, and buyers either sort of hold this bottom line for a second attempt, or we get a higher low, well, that's when you could start to go, okay, hold on, wait, this is potentially, maybe we're just going to range, and we could sort of start looking back up over here. That's not the first case scenario, in my opinion. I think first case scenario is probably that we go lower, at least down to test this 97 level. But structurally, if we were to see things sort of continue and make a bigger range through these areas over here, that's the way that it would come about. We'd get a rally up, we'd get a second effort from the sellers, we'd see the buyers move up from this lower level up to a higher level base here, put the pressure on whatever that rally point was, like where we got up to with the bounce, and should you break that level there, then you start to go up there. So I wouldn't be surprised if we see some sort of earlier, sort of at least maybe profit taking for the fact that it didn't explode. Because remember the Semporium or whatever was going on for another 2 days. Maybe people were like, hey, you know what? Maybe we could see some more fireworks over the weekend. And the fact that we don't get the fireworks, as I said, like you just saw, the markets are looking pretty flat and tame over the weekend. People might sort of go, hey, look, I was holding for the idea that we might gap down. We don't gap down, take the profit, bang. I'm very surprised that you didn't get profit taking through here at all. Like it wasn't even sort of like a down, bounce, 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 and then dribbled kind of down. It was just really just, as you can see, like just like a stone, bang. So if nothing happens between now and open, I'd probably be looking for a little bit of a rally up. These are the kind of areas that I'd be interested to see what the market values. If it can get above, say, 98, 98.20, okay, maybe you got something going on there. But I think certainly the way that we need to sort of play this out is to have this structure work where we sort of see a rally up and then a test down, test at these lows and see what the buyers do on this second effort. It's all about that second effort back into that support zone for me anyway. And so we got Aussie, and this is another one that I was sort of saying that I was like, oh, look, if it gets up to these areas, I think we had 50 and 70, and it just chops through these things like ridiculous. So look, again, back up above a zone that we've sort of seen the market look at previously, has held it fairly well. Let's get rid of this one here, just clean it up a bit. Obviously, sort of almost it came perfectly from this channel that we drew here. Obviously, didn't get that next sort of push down to these levels that we're kind of looking for if we're going to see this thing continue. And it really just sort of consolidated hard like a spring down over here. Now, this is very vital supports for Aussie. It really needed to hold this thing. And obviously, bang, right on cue, it did. And that is a big move for Aussie as well. Like, that's over 1% or something, I think, straight off the bat with that one there. Like, you know, I mean, that's the candle in one move is 1%. You're looking at, 1 and 15, 1.15%. Again, another one, like, yeah, there's a little bit of profit taking at 1 o'clock or so coming in here, but it's just consolidating the top side here. So, you know, you think, where have we sort of seen it be valued by the market previously? Well, we've got it actually into a little bit of a resistance zone through here. As you can see, this is that little box just before it took that next leg down over there. So look, I think again, same sort of thing. This is your trigger. We put in a higher high, and then we look up at 65.20. High from JPO speech. Target 65.20. Only 20 points in this move here, but that's most likely where you could sort of see this thing take its next leg up to. Again, look at these sort of moves where it's come up like this. I think there's so kind of stumbling over my words here because it's hard to call it because you don't want to say, hey, look, yeah, bang, just straight fade into this thing. But I mean, let's be honest, moves like this, they don't generally happen and just continue going up. It will see some profit taking. And that's why I was saying that what would cause that profit taking? Well, maybe lack of any sort of further fireworks from the whole sort of symposium or whatever over the weekend. I reckon that could sort of see people, hey, look, I held into the thing. I got a nice big bit of profit very quickly. Didn't get any extra fireworks. Let's peel off some. That could give us a little bit of a sort of pullback down through this area here. And then we could see where would the market like to sort of just pull it back up and then possibly move through here as well. So same with the DXY, that you've got your move up, fine, resistance, that's fine, it's on point. We've just kind of seen it a couple of times. I even marked this from way back in this area over here, pretty much along this line. It's around the 65 main number. Pull back down, possibly say get around down that 38, and then see are they going to move this next leg up here. Tackle these highs. If you take it out, well, that's where you'd sort of be heading. Hence why we put the alert there just above 65, 65.02, targeting 65.20s. That would be the course, I would say, sort of to move forward in that. I would be reluctant to sort of buy this straight off the bat to say that we're going to just continue and fly up here. I would say most likely, just from any time that you've seen these sort of moves happen, structurally, you'd probably see some profit taking before moving higher. But let's make this all green because we're moving up. That's how I'd sort of be looking to sort of play this thing at the moment. But as I said, look, if I get back down into some areas and I can sort of alleviate or at least, you know, cover, take a small loss, get out for even, small profits, whatever, I'll definitely be lightening positions just based off the new kind of outlook from the market. So it's a tough call here at the moment. So I think the first thing is to just see how the market moves through it all. I think underneath here was probably where we'll see a little bit of a cool down. So underneath that sort of support zone that we've got there. Actually, let's just fix one thing up. Let's make it underneath here. So underneath 80, I think we could see a little bit of a sort of look for the pullback. And this will be sort of what it's telling us how committed this move is, because at the moment it's just like profit bang, consolidated bang. If this just does go straight up, well, you could probably look past the 65.20. You could probably even look up higher. But I would say most likely we see a little bit of a pullback. This is what's going to tell us how strong is the commitment. If they rally from 38% of this move up through here, well, we know that there's a good chance that obviously, one, they'll make it back up to these highs, and two, there's probably a higher chance that it's probably going to go through them. But if we get a pullback down to, say, the support levels over here, 61%, it could still go. We can see this lining up with another level that we've had marked out from back over here previously, before in that last big run up over there after NFP. After NFP. So it's an area where you can see support. You can see, okay, 61%. We know that's a strong sort of support area. RSI, this is on 1 hour anyway. It's a little bit cooked here. What's a 4-hour RSI looking like? I mean, that's looking a little bit hot there as well. I would say that's probably a better bet if you want to try and sort of get long on it. Hence why, as I said, look, if this thing could come down here, I'll be lightening the position because you're going to have to honor the idea of this move. Like it or not, even if you think it's coming down over here, structurally, this thing is going to sort of move up, which it has. It's going to find resistance. It may not find resistance exactly where we've got it right now. I mean, it could, but 2 and 3. And this is going to be the leg. And this is what I'm saying. That sort of, say that's the size you move. If that comes from 38, most likely you're going to go through. If it comes from 61, there's a chance, obviously, still that it goes through. But it obviously shows that there is actually some profit taking happening. And buyers are happy to wait to a better level. They're not like, oh, let's buying it from the 38. You're like, no, look, let's just buy it. It's going high, it's going high, it's going higher. Let's buy it quicker. That's why they rally sort of sooner. And then, it moves up quicker and there's a higher chance. That's why a higher sort of fib retracement shows that most likely you're going to push through quicker. But should it come back down to the 61, you've probably still got a trade to come up and test these highs at minimum, which is a decent sort of little trade there. I mean, we're coming from, say, 64.50s up to 65. It's a 50-point trade in that. But it also means that it's a bit more questionable as to, is it going to go through? It's not as committed with that sort of breakdown to sort of fly through that level. So I think I think we will get a little bit of cooling coming down. And I'll be watching for where they rally from. So let's just put an alert on the 38 as well. It's only just after that other alert, isn't it? No. Oh, yeah. Anyway, so 38%. So if we see a rally from here, I think there's a good chance that we go higher. If we come back down to the 61, I think we'll still get a move that'll come up through here. I don't think this is just going to straight undo this miraculously. But I think there's a chance that potentially sort of we get a move back down to these levels, and then we sort of start to sort of target back up around 65, and we start to sort of form at least a little bit of a range before potentially going higher. And 65.20 would be the next level up there. And then above that, probably back over these levels here at 65.40. We'll do that when we get that. Wait till you break through these highs, and then we can start looking at sort of where it may sort of potentially have the next level for the sellers to step in. Gold, another one. Absolutely flew off here. So there was another bit of a, if we put this on the daily, I think I had this bit more of a triangle support coming through here. There's so many of these lines that it's just been chop city, really. But we do have this new support, third touch, which kind of held, which was that one from 33.10. We had sort of bounced the other week. We in the top side over there as well. So the drag this through. It's probably a lower time frame thing. Actually, I can't really do that. Let's wait to get it to a lower time frame. We sort that out. But we have got a little bit of this triangle kind of forming here. We've gone from one side to the other, one side to the other. We're getting very close to a pinnacle point of this. We had a little bit of a fake out, rally up, a little bit of a fake out. I could almost, whoops, not that one there. This one here. You can see that it really has kind of been respecting this larger triangle, and it's coming to the point here. So should we see US dollar completely fail, then bang, it's only right that this thing moves back up to the top, and then we can start to look at these bigger sort of resistance areas where we know that 64.30, that's really the kind of level that the market's going to be watching on, because a close above that would be very bullish. As you can see, every time it's got here, it's just done a complete 180 from it. So should it sort of get above 64.12, you're looking at 64.30s, but see above 64.30s, you're looking for tests of all-time highs up at 3,500. Jeez, wow. Every time you think this thing's about to sort of fall over, it just something happens for it and it just flies back into gear. But yeah, certainly has been. Look, it's been frustrating, but it's it depends how you trade it. If you're in and out, happy to commit to either side. it's not too bad. Like ranges are fine to trade. It's just sort of like if you're looking for the big breakout, you almost just have to sort of just go, hey, look, you know what? I'm either going to eat a little bit of this, or I'm going to sort of wait for confirmation on it all. But yeah, at the moment, look, both sides are either making money, giving it back, getting into drawdown, giving it back, or coming back to flat. Like everybody's kind of like on edge at the moment as to where this is going. But this triangle's starting to sort of firm up pretty well. Look at this wishful thinking price target back here. Look, I still think we will come down to these points. So maybe wishful thinking here, but I do think we will come down to here. Actually, I will get rid of that because that's not based off anything now that we're at this point. But that's the kind of level that we're looking for any sort of breaks under 3160. Major breaks, but I mean, right now that's completely irrelevant. Let's get into a lower time frame. Actually, we can see what happened here. So as I was sort of saying, same sort of thing that we saw with Aussie, same with the US dollar. It just consolidated right up into the end here. So technically, this is kind of a little bit of a little pennant flag. I mean, that would give you a big breakout and probably sort of give you a measured move back up to these sort of levels at the top over here. But, I mean, I'm not hanging my hat on that to say that that's where that would be going, 34.20s. Technically, that's where it would go with that break, should this thing break and then go above the highs here. So let's put an alert there. JPO high, highs 34.20. This isn't my first thought with gold, but look, I'll leave it there. Let's make this very small. Put you on one here for now. That's technically where that would go. I do think there's more chance, as I said, of a little bit of a cool off in that. We've still got a little bit of this triangle to go. It doesn't look like much, but I think sort of certainly a move above sort of these levels over here could see a bit more of an upside. But I think without fireworks, that's kind of how I'm sort of seeing things opening up. And we see a little bit of a pullback and possibly back into these levels over here. Let's say where we have these ones here, say around that sort of 33.50 level for little buyers to sort of come up there. Let's make this a bit smaller as well. The end of that, no. So build this as a little bit of a support. That was just that first one that it sort of came down. And actually, what we will do is this. Bang. I would say that's more likely what we're going to have, but I'd be looking for a little bit of a pull back down to these levels here, around these 50s. I mean, look, we've got a little bit of area here, potentially 56. So 56 to 50, 50 to 56, see that sort of tackle there, and have that sort of come up to sort of tackle the highs over there. That's how I'm probably going to see this thing sort of play out, or what I'll be looking for. Move along, try and do a bit quicker. We got copper. Copper refusing to sort of give up the ghost in that. So obviously came down, sort of hit that little support zone, came through, and he's back up here. He's in a bit no man's land here because you've got this little sort of falling resistance here, which doesn't really mean anything in the grand scheme of things if we sort of cap where it's actually at. But as you can see, it's obviously found itself a little support. This is the area where we're going to see a move down if we are going to see a move down. But it's really just testing the underside of this little channel over here. So should this thing reject and hold on the underside here, pressure is still, and the risk is still for a downside move there. Silver is another one that just keeps flying back on. Another thing, sort of moved up to the top, consolidated into the highs over there. Had a little bit of a triangle sort of forming, and it has come out the top side here. I mean, we're only a whisker off. I know it's not all-time highs, but it's certainly most recent highs, 15-year highs. So there's a little zone through here. That's what area it's going to have to beat if it's getting up over here. Look, it did break through this level that I sort of was looking at the other week, 38.70. Move above here, I would say, hold above here, sorry. 39.50 should be challenged to sort of see what happens with it all, but I've not really traded silver till I caught one of my best trades ever in this drop down here, chopped up a couple of times through here, missed this move here, and I don't think I've traded it since. So we're talking mid-June there. So I'm still sort of covering it, but to me it's just look, it has been summer, and that's what I sort of keep saying with this. It has been summer. So maybe once we sort of get out of this sort of summer period, we could see things sort of start to pick a trend, and maybe these things will be going way up to 50, or maybe we will be coming back down over here. I'm just not enough in touch with silver, and I just don't like the price action enough for me to really sort of be jumping on board with things at the moment. On that note as well, have a quick look at gold silver ratio, because this one did test above that sort of falling resistance, which it has been respecting for quite some time. But as you can see, it's coming back down here. It really needs to hold this level through here. There's a little bit of a support set up for it. If we break down underneath here, let's pull an alert on this. Okay, we're going to see, which will be silver push. That'll be the time that you see silver kind of probably tackle the highs there. And as you can see, market's trying to hold it a couple of times with these levels here. So it's starting to build probably a little bit of a range through here. And this would be what we're kind of looking for gold silver ratio. I thought it would have gone last week. It certainly looked like it was going to. You had a little break, little back test, yada yada. Gold was certainly taking a little bit of a clipping. Breakout box, this one here, but managed to hold it. So look, it's not to sort of say that it can't sort of go down further here. I think once we go down underneath that, then I think that will be sort of where silver takes the lead and sort of challenges the highs. But for me, it's not really something that I'm looking overly for at the moment. But certainly, I think back above sort of 92, you can see metals in trouble. Underneath 85, 80, just call it 85 as a round number, gives it a little bit of leeway down here. And I'm talking a close as well. Not just a spike down, but a close under these levels, I think will be what sort of gives it its direction for the metals market as well. So a little bit of a sort of it's not fully formed, but coming in maybe third touch down here. See what happens with this sort of little support area down here. But I imagine this would probably hold, and then potentially we see a little bit of a push back up over here, which obviously would probably be more sort of bearish for metals, at least in the sort of short term. But certainly they're looking quite bullish, so you have to respect that as well. And finally, just sort of finish off with the one, and again back down to the bottom side of its little box, closed quite ugly. Like as you can see, all these sort of attempts to this is back on the daily here. All these attempts through here, even this push down, it's held. Last little one, push here. But again, it's not closing down underneath the zone that it needed to, in my opinion. These are the kind of sort of levels that I'm looking at, hence the sort of move up here, move down here. My feeling is more that it was going to go up here. Obviously, that got slapped in the face. But again, these are the kind of things to watch. If we start to see this break down lower here, we're going to see Aussie push up a little bit. We're going to see, obviously, DXY at the same time is probably going to be getting a bit of pressure. And we're going to see gold probably moving up as well. But should this level hold here and we see a little bit of a push up, and this kind of sort of is a little bit of an indicator with it as well, how I think these things will move. I don't think it's going to break and come down over here. I think there's probably more of a chance that it will, if it is going to go down like that, it's going to go up and then sort of move down. I think that's probably your way that you're going to see this thing move down here, which means a bit of a counter trade prior to sort of like settling in. As I said, we've got those larger, well, not massive, but larger bits of data. We've got GDP, which is kind of third tier bits of data. We got PCE, which is what I think the market will be kind of pricing. I say pricing for because, that's what the Fed sort of talk about. At the same time, that'll be, you've got the unemployment claims, but inflation, we need to accept is now probably taking a bit of a backseat. So maybe PCE and the fact that it's, expected to come in the same as last month, may not be the big mover that it has been in the past. And I think maybe the shift has been sort of the spotlight has been sort of more shifted to the job side of things. All right, that's it from me.